They clearly need to have a conversation, especially a couple of months out from now. So what's interesting is the president's tweets are not what's driving the Fed, but certainly the president's actions are. We've seen global manufacturing deteriorate around the world, and that really starting to affect business sentiment. So while it hasn't spilled over into the U.S. consumer yet, the Fed is clearly concerned. And that's why it's almost a certainty that we're going to see a 25 basis point cut this week and the prospect for future cuts at the end of this year. But that's where the question is much more significant, because the Fed policy is now shifting from data dependent to preventive risk management. That means there's going to be a lot more subjective room for error between the market to misunderstanding where the Fed is and how that might cause additional volatility in the market.
It sounds like you think that the risk is to the downside on the markets then, if there is this greater leeway for error because of that subjective gray area that the Fed will be in.
The risk is totally to the downside. Let's look back to September of last year. The market's essentially about 3 to 3.5% above the highs we reached back in September. Most of that return came from January and June of this year, which were big months for Fed guidance. Without that Fed guidance, the market seems not to be chugging along very well. So the question is a 25 basis point going to be enough to continue to spur an equity market rally into the end of the year? And there's significant risk to the downside.
Jim, will it be a 25 basis point cut enough to propel the market?
I think it's priced in, Tyler, but I think what's being underappreciated here is the Fed is the last to ease. I mean, we've had a ton of easing by the real money supply has gone from 1% to over 3%. We've had fiscal juice that's expanded over the last year by almost 1% relative to GDP. We've had a drop across the entire yield curve, 1% or greater most of the way across it already. And it's been done not here, but across the globe. I feel much better that the Fed is going to cut rates for the first time after 6 to 9 months of already easing quite dramatically. And the lag time is already at work. So I think the economy might already be starting to pick up a little bit, not only here, but globally. I think the Fed's probably going to be one and done. But if they have to cut rates once or twice more, then it really won't matter, because if they have to cut rates 2 more times before the end of the year after this one, we'll be in recession and probably a bear market. I don't think that's going to happen. I think the economy is going to turn. And with the backdrop of low rates and relatively okay valuations and positive liquidity growth and negative sentiment, I think there's still quite a bit of room in the upside.